I think we're running out of exciting things to talk about on this show, Robert.
Well, we were always talking about boring and
Well,
40% off normal, so maybe that's why.
maybe, maybe I guess the new normal is just boring normal. And on this episode of Real Estate Chat with
Jonder Perez.
and Robert Eid, we're going to show you why the October month of real estate sales here in the Toronto Regional Real Estate Board is kind of boring and might be the new normal that we're going to see over the next couple of months, maybe well into 2024. So, Robert, some of the major, I guess, keywords, if you were to look at it, is inventory, price, sales, projections, listings, and what's going on with all of these offer nights or lack of offer nights that sellers had always anticipated and buyers were so intimidated by. But we're going to jump into your charts here so that we can give a glimpse to our Real Estate Chat viewers who have made sure they subscribed and perhaps like this video at the end. Okay, so Robert, let's start with prices. You still see it hovering above the 2022 price point. So this is where we're going to end up. Robert, take it away.
Yes, well, we start by saying, what's the typical difference between October and September? And we found that over the last 22 years, that the average is 1.33%. There are 20 up years at 1.7 and 2 down years of 2.6. So is this an up year or is it a down year? I said to myself, and I said, I don't think it's an up year. So instead of saying 1.3, I used 1, and then I said, you know what? I don't think so. What's the average between the up and the down? And so I picked .92. And .92 gives kind of the same result of it's, if you want to be positive, the second highest October at 1.109 in history. It's just a tad 275 below 2 years ago. And it's 83% of the peak. It's 106% of where we were at the end of January. And it's .92. I'm sorry, .92, 1 month down. So it's still following the pattern. It's broken down through last year, but it's I'm sorry, above the previous high.
Oh, 2021.
Yeah, 21. And so we're still above 22. So is there anything wrong with that? Well, if sales were at 8,000, there would be nothing wrong with that. But if sales were at 8,000, then we would expect prices to go up. So because sales are not at 8,000, they're at 5,000, prices are languishing. And okay, and the next one is
let's talk about inventory, because we saw a big bump.
Inventory is the other thing. There's that if I'm a buyer and I see that there's more and more houses for sale in every neighborhood, then I get more and more complacent or cocky. And I say, okay, I'm going to get the pick of the litter. I'm not going to be in a hurry. And the only thing that's going to moderate that in my mind is, okay, now it's October, then it's going to be November, then it's going to be December, then it's going to be January. I don't want to move in the winter. So I either got to do something now and move before the snow flies, or let it go till next year. And a lot of people are doing exactly that. If I can find a super deal now, I'm going to do it. Oh, but I have to sell my place, or I'm going to wait till next year. And we are not risk takers in Toronto, Canada. And I've got this from a couple of days ago at 19.4. I just broke it through 20,000 this morning, yesterday, and today going through 20,000. But you got to wait for the sales to come through to eat up some of that inventory. So it's
what's interesting. What's interesting here, I guess, not so boring. What's interesting here, Robert, is when inventory was going down, obviously the inverse reaction from the buying public was true. Inventory was becoming scarce. Everybody had fear of missing out.
Yep.
And buyers were praying for inventory to go up. And so we've had subsequent increases in inventory. And now, as you said, everybody's just sitting on the fence or being conservative about it, or being cautious about it. And so, Robert, I mean, if we were to look at this pattern and going into, let's travel into the future, spring 2024, where you should still see, I mean, first of all, winter time, we'll see a dip in inventory, but let's face it, sales are not going to, nobody's going to get excited at that point either because of the present market conditions. But in the spring, I guess it's too early to forecast or project out here, but in the spring, we'll see even more inventory than what we have now, wouldn't we?
Probably. Probably like a few people will say, I give up. I'm not fighting in this terrible time. I'll stick with my house. I've lived here for 31 years. I can live here for 33. Where am I going to go? Everything seems bad. It's easier for me to do nothing than do anything. So I'm going to do nothing. So some will withdraw. But as we've said many, many times, there are people who are now having a hard time with carrying their mortgage, or a hard time with their tenant and carrying the investment property that they have. And there will be some opportunities. I don't see it being in like a complete flop of everybody's dying to sell everything, because the built inventory is largely populated by people who do not have a mortgage. You know, the guy that's lived there for 51 years, he does not have a mortgage. He doesn't care what rates are. Maybe he can't do what he wants to do this year, move in with his daughter-in-law, but he's not in a panic. So all the way along, when we get around to sales finally, we'll see that the only thing you can probably expect is for sales to continue at about 40% less than the average.
Well, let's look at sales then, because what
okay.
what you're projecting, Robert, here is that sales become the 25th best October and dips below 2022 levels. So how
Well,
come?
and that's what it's been the whole way along. Look at all of them, except for February or March or whenever it was when you had the 14th best. It's all been 25, 20% or 20th of them all. And against the 5 and 10 year line, it's all been way below. So there's nothing to say that should change. Will we have a pause and a rally like everybody had? The stock market went up, spec buyers jumped into the real estate market again in the spring. Is it going to happen again? No. So expect it to be a quiet year. That's all.
And this could be the normal. Like, so if, I mean, projecting ahead to next year, we may see similarities in this, Robert, if nothing
Well,
else
look at the
changes.
lousiest trough. Okay, the lousiest trough right there in the lockdown craziness, when everybody didn't know whether the world was going to come to an end. There's still, 3,000 trades. It happens. It's enough trades all the time instead of the regular. And what does it say there? It was 68% off, 68% the 5 and 10 year average. So I'm not saying 68% off. I'm saying 40% off. So we'll just keep putzing along the way we are, and prices will drift. They won't go up, they'll drift.
But then we're going to run out of things to talk about, because if sales just hover about this much, there's nothing really exciting, I guess, until our real estate chat viewers see the next bump up in the real estate market, which is probably going to be several episodes to come. Right? But anyway, let's look at your projections here, Robert, so that our real estate chat viewers who are very analytical and they pause on this screen to zoom in and see how we're doing the numbers and audit your calculations. Take us through this so that they know how we arrive at your figures.
Okay, what we're trying to do with this really is to find out how close or far the published number of terminate relists, we call them relists or do-overs, are every month. And we do that with a very complicated backwards way of starting with a known and adding and subtracting everything that we know or guess from then on, and then comparing that at the very end. So last month, September, there was 16,000 new listings. I say this time it's going to be 14,444, which is a little bit more than it was last month. And there's a fewer new listings this month, but there's been a lot more of these relists, just as we indicated. Sales are going to be around 4,800, which is, it's not terrible. It's not great. It's not terrible. It's what it's been for the last little while. And so we figure out then that of the 7,200 listings that were terminated, we subtract off the 4,444 that are relists that are still continuing, and that left that there was a net number of terminates. So we subtract the net number of terminates from what we've added up as new listings based on top of the old inventory, minus the relists, minus the sales, and we come up with an estimate of next month is going to be 21.3 as what inventory is compared to the arithmetic of 19. We're off by about 1,600, is maybe 5%. That's pretty darn close. It's probably where the numbers are going to be. And I look with anticipation at when more and more people recognize that having new listings that are overestimated or overpublished by 30% every single month. Cannot stand. We cannot let there be a misunderstanding of what the new listings are by 30% every month. And so the real estate board, if they can publish listing days on the market, property days on the market, adding every single day that every single iteration of a listing has been on the market together, and publish that on the front page of the notice pages, there's no reason they can't publish this
Well,
list information, which they now publish on the back pages of Stratus rather than on the front page of the Market Watch.
I mean, computationally, it would make sense because there is only one address for a property, and so if a property gets listed 3 times in the month, you should just combine all of that as one new listings, not 3 new listings. So you know what? I don't understand why it's so difficult to do. So I hope the Toronto Regional Real Estate Board administrators or whoever is doing that stuff is watching this, because I mean it is kind of a difficult number to calculate backwards. Robert can do it, and the report can do it, but why can't it just be a default? So Robert, takeaways absolutely, Robert. So takeaways from this, because this may be the new normal: 4, 5, 6,000 sales, 72, 80, 85,000 sales for a year, 2024, 80 to 90,000 maybe. We'll see.
More like 75,000 for the year. Yes.
Okay, so I'm going way on the optimistic side of things, but there's nothing else to say. I mean, that's the market. So if you're a real estate agent,
it can't be a boom every year. It can't, and it can't be a bust every year. So it's a mush. It's an adjustment. It's a how do we work around interest rates? That's really what what the real estate chats are going to be about in the next little while. Is if we know that this is the peak of the interest rates, and if we know that they had a stress test because they knew that was the bottom of the interest rates, and so they're trying to protect the market and cushion it for when interest rates went up, what do we do now if we're at the peak of the interest rates and we know they're going to go down? So that's, as you know, Bank of Canada governors, as Office of the Superintendent of Financial Institutes person, and then as belly to belly buyer and seller brokers and salespeople, how do we help people buy houses with monthly payments that they can afford and at prices that they're gladly willing to pay and willing to sell for?
And that's because we know that everybody watching this has to live somewhere. So either you're renting your place, either you bought your place and you're renting that out as an investment property, and you're also living in another place that you own. But real estate is one of those things that you need to have it, or you're renting it, or you, as Robert mentioned in a past episode, which is pretty interesting, never thought of this way, either you're renting your property or you're renting money from the bank in the form of your mortgage. So I hope you took away something. And if you're watching this by now, wow, I commend you, because I mean, hey, nothing exciting to see here aside from what could very well be the normal over the next several months. Thanks for watching this. Take care and bye for now.
See you later. Bye for now.